Hello and welcome guys to another Technical Tuesday episode. This is the third installment of the Technical Tuesday series, and in this video I thought I'd share with you guys how I go about analyzing the market, the steps that I take and the technical analysis that I perform on a chart to determine with a certain degree of accuracy the most likely route for price to follow in the near future. Is price likely to increase and then for me to enter buy trades, or is price likely to decrease lower and then for me to enter sell trades? And to help me with this technical analysis, I'm going to be using the Australian dollar, Canadian dollar chart. And the first step that I do before I even start my analysis is just to determine where price is at the moment and where price is compared to previous price. And to do that, you make use of the bigger time frames, and it's always important to start out with the bigger time frames and then work your way to the smaller time frames, just so that you have an overall indication, an overall picture of where price is at and where price can move to in the near future. And to help me, I'm going to use the weekly time frame, and I'm going to zoom out a bit, and here we have the weekly time frame, and it dates back to all the way to somewhere in 2017, so that's approximately 3 years in the future. So this is a 3-year time period on a weekly candlesticks. So what I do next is I try to determine the most important support and resistance areas in the market, and a very strong support and resistance area that I can see when I look at this chart is over here, and I'm going to draw this support and resistance area for you guys just to clearly see what I'm seeing. Just let me expand this a bit all the way over here. So this area, as you can see, has been tested numerous times over this 3-4 year period, and it acted as a support over here for price to bounce. Then price briefly broke through and came back, tested it again as a support area, again over here, again broke past, and then the support turned into a resistance for price over here and again over here. So as you might remember, when support breaks, it becomes a resistance for price, and when resistance areas breaks, it can become support areas. So currently in the market, we are at this very strong support and resistance area in the market that has been tested for almost 4 years now. So what we can expect is some sort of price reaction at this area, like it happened in the past. So as you can see, price reacted at this area. So we might expect price to have a reaction lower at this area. Price can even accelerate higher at this area. We'll have to find out, and we have to perform our technical analysis to get a directional bias for where price can head to. So that is how I start my analysis. Now I know that price is at this very strong support and resistance area. I'm going to go to a daily time frame now to get a better idea of what is going on at this support and resistance area. Now, as you can see, price has tested this area a number of times. Price aggressively came into this area, and afterwards it was rejected and 2 bearish candlesticks followed. Again, price breached this area and an aggressive decline was followed by these candlesticks, and then on a third time price came into this area followed by an aggressive rejection at this area. So we can see there's definitely some sort of price reaction at this area, and price is reacting at this area, and it's likely that price is being rejected, and this is the first indication that we might expect a lower move in the future due to the 3 rejections in price over here. And as you can see, another good indication is that this movement over here made a lower high than the previous swing high over there, and this might be a turn from an uptrend to a downtrend, but we'll have to wait and see. So that is what the daily time frame suggests to me. Now I'm going to a smaller time frame, the 4-hour time frame, and let's have a look at what's going on over here at this resistance area. And immediately I can see a chart pattern that is appearing over here, and this chart pattern is called the head and shoulders pattern. And to visualize it for you guys, this is the left shoulder followed by the head, and this is the right shoulder. And this head and shoulders pattern can either act as a trend continuation or trend reversal indication, depending on where it is found in the market. And this head and shoulders pattern is found at a very strong resistance area. So again, this is another confluence that price is likely to turn around and continue on lower. So at the moment we have 3 indications that price is likely to continue lower. So it's looking good to the downside at the moment. Now, how you go about trading this this chart pattern is you draw in your neckline by connecting the shoulders, and I'm gonna make use of a trend line. As you can draw it like this. I'm just gonna align it a bit better over here. This trend line goes back a long way, but we're just gonna focus on this chart pattern over here. There we go. Okay, so we have our left shoulder bounced on the neckline, our head bounced on the neckline, then our formation of the right shoulder. Now, how you go about trading head and shoulders is you wait for the break of the neckline. So whenever price breaks below this neckline over here, this can be another indication that price is likely to head lower. And I would say that a good area to use in the market and to enter the trade would be if price broke lower than this intraday support area over here. As you can see, price has tested this area, bounced, tested it again, and recently tested it again. So when this area is rejected and is broken, this is also a good indication that we can expect a move lower. But as long as this support area holds, price can still go much higher. So this is a good indication of where you can enter your short trades. Wherever the candlestick closes below the support area, then that's a good area to enter your shorts. Just another indication that I can see that we are going to expect a move lower most likely is if I draw this intraday support area. I'm just going to draw another rectangle at this left shoulder. Let me just make this a bit clearer. As you can see, this is an intraday resistance area that is drawn from the left shoulder over here, and as you can see, price came into this resistance area and reacted at this resistance area similarly to the left shoulder. Another confluence that I can add is to use the Fibonacci retracement tool from the head to the swing low of the neckline, and as is shown over here, price tested the 61.8 Fibonacci level, which is a really important Fibonacci and a strong resistance area for the market. And this Fibonacci tool together with this left shoulder resistance together with the overall bigger support and resistance area gave a reaction to price and pushed the price lower. So this is just confluence on confluence on confluence that price is likely to head lower, and that is how you build your trading plan. You look for different trading setups in the market, and when you see something like this where all fingers just point to a lower move, then this is a good indication for you to enter the trade, because this is a really good setup for you guys to take then. Because I would advise that you don't take any setups that you aren't 100% sure about. And this is the analysis. I did the hard work. I did my analysis. I'm confident in this trade, and I'm willing to risk 2% of my account on this trade based on this technical analysis that I performed. Just a quick additional thing that you can add is this very important psychological level over here of the 0.97 level, where price touched this psychological level, and as you can see, there was a lot of orders being placed at this area, the psychological area, and look at this aggressive move lower. So it's likely that the big financial institutions wants the Australian dollar, Canadian dollar to move lower. So that's also another confluence to have in your trading toolkit. So how you go about trading this head and shoulders pattern is you wait for this support, the support area to break with a clear candlestick closure on the 4-hour or the 1-hour time frame, and you enter your short position over here just below the support area, with your stop loss above the right shoulder. But to be conservative and to be safe, I'm going to put my stop loss just above the 78.6 Fibonacci level, just in case on the off chance that price decides to test this level and it can still turn around, and just an added precaution and to be safe. Now the target area is usually for head and shoulder patterns is the same length from the top of the head to the bottom of the neckline, like this, and you take that length and you take it at the where price exits the chart pattern over here, so like this, and then your target is over here, so like that. So as you can see, this is a really good risk to reward ratio as well of 1.42. You're risking for example $100 to make $142. So that's another thing to add to your trading plan, to always ensure that you have a favorable risk to reward setup in the market. So that is the game plan for the Australian dollar, Canadian dollar this week and leading up to next week. So I'll keep this analysis on this chart, and I'll update you guys in a future video of how this setup played out, whether it worked in our favor or against us. It doesn't matter. I only risked 2%, and according to my analysis and my trade plan, this is all valid. This is a valid setup to take, and when a valid setup appears like this, you take it, and by only risking 2% of your account, you always ensure that you apply the correct risk and money management, and the 2% loss isn't gonna be that big of a deal for you guys. So that is the Australian dollar, Canadian dollar, and I'll see you guys in the next Technical Tuesday episode. Have a good one. Bye bye.